So if you are a salaried professional, then this video is very important for you because in this video, I will give you a stock screener or a filtering criteria which is suitable for your schedule. So if you are busy at your 9 to 5 uh, role and you don't have much time to do the scanning in the stock market, and you don't want to do the rolling up the sleeves kind of work, maybe you can spare half an hour to 45 minutes a day, then this video is going to be very helpful for you. I will give you a simple stock screener, a filter which you can use on a daily basis. And this is applicable both for swing trading and positional trading. It will ensure that you are always in the best of the best stocks from the best of the best industry. So we will create that filter today. Here, I will show you how to apply that filter through MarketSmith platform. Now, MarketSmith, as you know, if you have been watching my videos, I am a customer of MarketSmith. I use their platform because it saves me time. I am not officially associated with them. I don't recommend them. But I am saying that I personally use the platform because it saves me a lot of time and it is not very expensive in India. Okay. Now, if you are a trader who is outside India, you can apply some similar principles. Try to understand the logic behind each of these filtering criteria, and then apply it to your market. Okay. So it doesn't matter where in the world you are, these filters will help you. So let us create that filter. Okay. So I will go to MarketSmith. I click on idea list. Then I click on build your screen here, filter India stocks. So here it will ask me for a filter. So I have created one filter. I don't want to discuss this. I will create a new filter for you. Okay. So filter number 1. So first criteria, price strength. I want good or great. So price strength is 80 or more. What does that mean? So you are only selecting those stocks which have a relative strength of 80 or more, or you are only selecting those stocks which have done better than 80% of the entire stock market universe on a 52-week performance basis. So these are the leading stocks. Then buyer demand, you click on A and B. Okay. This represents stocks which have strong institutional demand. Number 3, you click on good and great. So group rank, the industry group rank. So every stock belongs to an industry group. Every industry group belongs to a particular sector. So MarketSmith has divided the entire stock market into 197 industry groups. And we only want to look at the top 40. That's why 1 to 40. So if the industry group rank is, let's say, 35, it will come in our uh, criteria. Okay. So this is because we want to select the best performing industry groups. If we look at the 6-month performance of all the industry groups, we want the top 40 best performing industry groups. So basically, these 3 filters are the key. I will add more filters, but this is the key. Okay, these are the 3 main pillars of your screening criteria. So you are selecting the best stocks. Sorry, you are selecting the leading stocks from the leading industry groups and which have institutional demand. Okay, that 3 criteria itself is half the battle won. Okay, then we will use some criteria which will ensure that you are not into penny stocks or illiquid stocks. So go to current price. We want the price to be at least 20 rupees. So if you are not trading the Indian market, if you are trading the US market, you could use $10 or $15, whatever you want, but set a price criteria so that you are not into penny stocks. Then average rupee volume, I will go with more than 1 crore. At least 1 crore means 10 million. That is the currency rupee volume. Okay. So this is decent. Then average daily volume, this is number of shares traded. This I mention as 200,000 shares traded. So I'm going with stocks that are not penny stocks. I'm going with stocks that are not illiquid stocks. So I'm going with only liquid stocks where I can easily glide in and glide out. If I want to buy, let's say 5,000 shares of a company, I should not be facing a problem because more than 200,000 shares are traded every single day. Okay. Next, price compared to 52-week high. So should be greater than minus 25. What does this mean? So if this is the 52-week high and the current price is below the 52-week high, it should not be more than 25% below the 52-week high. Basically, we are selecting stocks which are near their 52-week high and we are giving a 25% cushion there. Okay. Because that is the base forming area. Price versus 52-week low, we want the price to be at least 25% above the 52-week low. So greater than or equal to 25%. Okay, this will ensure that you are only in the strong stocks. Daily price change, we will make it greater than -5. So this will ensure that any stock that has fallen 5% or more in a single day will not come in your radar. Okay, if the stock is falling or increasing, it will come in this. But if it falls more than or equal to 5%, there is something wrong with the stock if it is falling that much in a single day. So greater than -5%. Okay. Price versus 50-day. So the price should be above the 50-day moving average. The price should be above the 200-day moving average. So this is the criteria. I am not yet putting fundamental filters. I will show you a couple of filters which you can put, but this is the main criteria. The leading stocks from leading industry groups which have an institutional demand, which are not penny stocks, which are liquid in nature, which are close to their 52-week high, which have not fallen more than 5% in a single day, and which are in a strong uptrend, meaning they are above the 50-day and the 200-day moving average. This is the criteria. In one statement, I have given you the entire criteria. Okay, so if I save this and I apply this, see, you get 46 stocks. How many stocks are there in the Indian stock market? 5,033 something. Okay, 5033. And here you are getting 46 stocks, which means less than 1%. So this filter ensures that you are rejecting 99% of the stocks in the Indian stock market and you are only focusing on that top 1%. Your job is to put this filter every day and look for base formation in these stocks, because you know what is common in all these stocks. All of these stocks are leading stocks. All of these stocks belong to leading industry groups. All of these stocks have a very strong institutional demand. All of these stocks are near their 52-week high. All of these stocks are liquid stocks. All of these stock, none of these stocks are penny stocks, and all of these stocks are in a strong stage 2 uptrend because they are above their 52-week, they are above their 50-day and the 200-day simple moving average. So these are the characteristics that legendary traders of the past have found, that these are the characteristics that contribute to the stock price rise in a growth stock. Okay, so this is called as reverse factor modeling. You study the growth stocks of the past and you see what characteristics they were exhibiting before they began their growth phase. And whatever filters I have discussed here, these are the filters that came out as common characteristics in general, okay, for growth stocks. So now scanning 46 stocks every day will take you less than 20 minutes or half an hour, depending on how much practice you have done. Half of these stocks may not be forming a base. Okay, they are, maybe they are in an uptrend. So there itself you can reject half of these stocks. So that leaves you with what? 25 stocks. Out of the remaining 25 which are forming a base, you might not find stocks which have completed 10 candles in the base. So that will again eliminate, let's say out of 25, you can eliminate 15 stocks. So now you have 10 stocks to work with. Out of those 10 stocks, maybe 5 are showing fundamental strength, 5 are showing uh, fundamental weakness, 5 are only showing technical strength but no fundamental strength. So you could choose which stocks to swing trade, which stock to trade for, for positional trading. Okay. And this will not take you more than half an hour or 45 minutes. The more you practice, the more you will get in tune with this, because more or less the same stocks will repeat every single day. This list is not going to change drastically every single day. And all you have to do is just come and refresh this, because the filters are already stored. Now, if you want to refine this filter, what you could do is you could go to fundamentals and you could demand that the quarterly sales should at least have double digit growth, the recent quarterly sales, and the recent quarterly growth in EPS. So, double digit growth in quarterly sales and double digit growth in quarterly EPS. These are the two things that you can least expect from a stock which you expect to grow. If you are calling something a growth stock, it should be showing you explosive growth in earnings and sales. Two digit means 10% or more. But ideally, I have seen stocks where you see quarterly growth in sales is 100%, quarterly growth in sale EPS is 200, 300%, sometimes even 1000%. Okay. Those are the kind of stocks we need to focus on. So this will filter out all the stocks which are showing weakness in terms of fundamentals. Okay. At least double digit we should expect. And then if you save this and apply this, out of 46, you see only 32 are remaining. Okay. So you are weeding out those stocks which are not showing any fundamental strength at all. Okay. So if you just use this filter, you will ensure a significant improvement in your skill as a trader, because your stock selection skill has improved. This will ensure that you are in the leading stocks in the leading industry groups with institutional demand, which are near their 52-week high and which are already in an uptrend. So the criteria itself is half the battle won. Okay, this will keep you away from 99% of all the stocks in the stock market. Isn't that great? Okay, so I hope you will apply this filter. If you are a salaried professional, if you have fixed working hours given to you by your employer, because I see some of my family members, some of my existing students, my relatives, some of my friends, they are working at a regular job. They have fixed working hours. So when they are back home, they don't have the energy, they don't have the time to do all the grinding work that I do on a weekly and a daily basis. I personally look at roughly 700 to 800 stocks every week. That is my weekly routine. On a weekend, I look at 800 stocks. But as the week progresses, I am narrowing down that list. Okay. So if you don't have time to do all of that, then please use this simple filter. This will ensure that you don't get into penny stocks, illiquid stocks. It will keep you away from all of that junk. You are only dealing with the best of the best, the cream of the crop in this. Okay. So I hope this video will add value to your trading journey. On these stocks, you can do all kind of analysis you want. Okay. You do weekly charts, you do monthly charts, you do daily charts. Monthly, I don't recommend, but you do weekly chart analysis, daily time frame chart analysis, you do swing trading, you do positional trading, but work with this list, because these are the stocks that have proven themselves to you. Okay. If a stock clears all of that criteria and then reaches your radar, it's worth your time. Okay. So I hope this video has helped you. Please support this YouTube channel if you think my content is valuable, because I want this video to reach those people who genuinely want to become professional stock traders, but for some reason cannot afford my video course or my training or my coaching. At least let them learn through the YouTube channel. Okay. So I invite you to please like, comment, and share this video so that this video gets the reach that it deserves, because I have really worked hard on creating these filters. Creating the filters takes only 5 minutes, but arriving at that filters takes 2 years. Okay, because a lot of thought process goes behind that. Thank you so much.